fellow human beings. So this is only potentially, because we still have one more day to go, and I'm not out of the woods yet. But based on what I'm seeing, it looks pretty nice. So let's look at the potential new dawn for the logic. And what do I mean by that? Well, let's take into account a few things that we all are aware of, such as volume analysis discrepancies in the current market situation. What do we know of that's going on in the market? Well, many of us have seen, when you look through the holdings and 13Fs of all these companies, it's clear as day that majority of companies are held by big banks and money market fund managers. Now, this is likely due to transition the supply and demand to the ETF market, allowing them to control it through creation and redemption of ETF shares, which are supposed to track the major indexes, and as well as the repo market calling for large amounts of collateral, being anything from treasury bills to other types of securities, which we have seen are included in the repo in the form of collateralized haircuts. So, and we know this as well because not only does it reflect in their portfolios with their enormous holding sizes, but if we query with Alphaquery, 65% or more held by institutions, you have 2,358 entries that come back underneath that criteria, which that's basically a third of the whole market. Now, just to give you an idea, Goldman Sachs, they have 6,432 holdings. That's literally almost everything. Vanguard has 4,635. This is the case for most big banks and most money market fund managers. Now, number two, the second thing on top of the massive amounts of share ownership by these large players, we also have a giant operation that's in existence where mass collateral is swapped for cash daily, and then that cash is held overnight and basically carries the same effect as share lending. Well, that's going to be the repo market. The one that's sitting at, as of today, $1.818 trillion. That is liquidity that's been taken out of the market. So you put these two things together, and now all of a sudden you have basically no shares trading on the open market. It's only option exercision, and that explains a lot of what I'm about to show you. So our primary criteria has been what? Gaps for visual indication of play opportunity. Gaps on the daily is what we want, and to continue digging in on the logic. That's our first thing we want to be able to see. Now imagine scaling that down, or imagine using this in our weakness, which has been liquid stocks. But what if we could find the true intentions even in the liquid stocks using the same criteria? Well, let's see if we can do that. And the reason why liquidity has been not part of the criteria is because it convolutes everything. So today's prediction with the SPY using volume analysis, I'll walk you through the thought process behind it. And again, this hasn't came to fruition yet, so keep that in mind. So if we look at the SPY ticker, this is the SPY's ticker, volume analysis. You can clearly see here that 15% of the overall volume today came in at $417.22, with none of it being buy volume, none of it being sell volume, basically all neutral volume. This is a reoccurring theme that you'll see all over the market in liquid stocks, typically. It also happens in illiquid stocks every now and then, but on days where illiquid stocks get liquidity and they run, you'll notice the same pattern. Now, look at the differences here. The number one price by a shit ton, we're talking 15 times more than the second, is 417.22. Well, the stock closed today around 427. So keep that in mind. Keep this image in mind. This right here, the typical picture. The number one price will be contradicting the trend of the day, with 100% of the volume neutral. This is a typical trend. So we look at the trend for the day. The SPY had a massive run of 2.53% today, up $10.55. And if you subtract how much it's up by this price here, it basically equals the opening price. So keep this in mind. Now, turn to the options chain. Now, this requires a little bit of digging when you're trying to go with a strike price, but the way I would do it is by the open interest. So the most OI existed today down at the $400 put marker. Now, I was watching this all day long, and I bought in at 12 cents, and then when it went down to 4, it went down to 4 cents today. I waited strategically for the very top of the day of the run, and I averaged down, and now my average sitting right at 0.05, so I'm up currently 20% despite these puts being down 82%. Now, I want you to pay attention to this chart here. This is the chart for these puts. So this chart going up doesn't mean that my puts are wrecked. I want this chart to go up because this is the put specific chart specifically for the SPY $400 April 29th, 2022 puts. Now, we do have unusual option volume on this. We have 48.2 thousand volume with only 40 open interest. That's the definition of unusual options volume. We have a mid price at 0.07. The bid is at 0.06 and the ask is at 0.08. Now, that's badass, but look, what do you see on the chart? You see a gap. Now, keep in mind, everything's going to be scaled down a little bit, like ratio-wise. You have a gap right there. This is on the hour chart, which is basically the equivalent to the daily. For our stock chart, you have RSI that's damn near oversold, or yeah, oversold. And then you have a MACD banana. So my assumption is, will this gap, there's been none other gaps in this whole entire structure, will this fill? That's the question. If it does, and this fills, this is at about 30 something cents right here. That's a 600% day. So that's what I'm going for. I'm trying to see if our core logic can be micro scaled down and utilized in the options chain for liquid stocks. Because remember, if there's no liquidity in the market, but yet all these highly liquid stocks are really hard to judge based on, our core criteria alone, maybe adding in the options chain where all the shares are mainly traded anyway will give us the real picture. And that's literally all this is. Right there. It's trading well below the moving averages. I'm just saying. It's the same thing, Billy. So tell me, when we look at the SPY put volume analysis now, do you remember the one I showed you a second ago where the top price was red, yet the SPY was green today? Well, maybe the true intentions are not in the stock volume analysis. They're going to be in the options volume analysis. And obviously, the one you would want to survey would be the one with the most options. Now, by what fucking coincidence is it that the number one volume today is 0.05, 41% of the volume came in, slightly more buy than sell. The next closest was at 11, and that was at 6.83. These people must have paper handed out right there. But again, most of this is neutral. All of this is neutral, basically. You have a little bit here of green, green, red. This is the only one that's a full bar to the side with basically no neutral. So the majority came in at 0.05, 41% of the volume for these contracts today. Well, if we didn't get to this price until very close to end of day, it makes you think that probably most people bought them, or as far as large institutions. Now, how do we know this wasn't just a bunch of stupid retailers throwing money away? Because the volume analysis. Remember this thing? It's always backwards from how it really is on the primary market, or the secondary market rather. Well, when you look at the order flow on this chart, on the actual put chart, what do you know? Double the amount of inflow is outflow. And large, 1,024, medium, 937, small, 642. So obviously, there's something going on here. And I think as long as the SPY closes around 420 or below tomorrow, holy taco tits, we may have something on our hands here. But, I mean, we're not going to know for sure until then. So let's go, Brandon.